PayPal's price target is $145, representing a 2.3x gain, according to a Wall Street analyst. Does this price hold water? I've done an analysis of their stock. Let's find out. Here's a hint. I'll steal a phrase from Jeremy at Financial Education. I think PayPal is easy money. Oh, can you guess where this picture's from? As the world of digital finance evolves, PayPal continues to be a key player. Not just a key player, the key player. PayPal is the 800-pound gorilla. To kick things off, let's take a closer look at PayPal's business model. PayPal operates as an online payment system that facilitates transactions between buyers and sellers. From peer-to-peer payments to e-commerce transactions, PayPal has become synonymous with online financial transactions. Its diverse revenue streams include transaction fees, interest on outstanding balances, and various other financial services. Let's just say PayPal stock has been nothing short of a roller coaster. I mean, look at that. It looks like Mount Everest. Is it better to be at the base or at the peak? That depends on what you are doing. Now let's dig into PayPal's products to see if they're ready to climb again. I'll just say PayPal does a lot. So, you have consumer payments. PayPal's primary function is to facilitate online payments between consumers and merchants. Users can link their bank accounts or credit and debit cards to their PayPal accounts to make secure transactions. And who can forget about Venmo? Venmo is a very popular mobile payment service in the United States that allows users to transfer money to one another via a mobile app. When you want to send money to a friend, what options come to mind? Well, you have Cash App from Square, you have Zelle, which sucks, and you have Venmo. Next up is merchant services. PayPal provides services for businesses to accept payments online. This includes tools for integrating PayPal into e-commerce websites and processing payments through various methods. PayPal enables person-to-person payments, notably also through Venmo and also through themselves. I can talk today, I swear. This allows users to send money to friends, family, or anyone with PayPal accounts. Now, Braintree is a subsidiary that PayPal focuses on to provide payment solutions for businesses, including online and mobile payments. PayPal offers a credit service allowing users to make purchases and pay for them over time, kind of like a credit card. It's not actually a credit card, but it kind of functions similar to one. PayPal facilitates international transactions, allowing users to send and receive money across borders. Buy now, pay later. Divide your purchase into interest-free installments with pay in full or pay monthly. PayPal also owns Payly, or Payd, I can't pronounce it. It's a BNPL system in Japan, which was acquired for $2.7 billion in 2021. Now, PayPal also brought to the US its POS terminal, Zettle, in late 2022. Now, in PayPal's release, they stated, the in-store solution comes with a Zettle point-of-sale app pre-installed, and small businesses will get an integrated solution that not only helps them accept a range of fast and secure payments in person, including credit cards, contact lists, digital wallets, and PayPal and Venmo QR codes, but also helps them manage sales, inventory, reporting, and payments, all in one place. That kind of steals a page from, Square. Now, being a new entrant in the POS market, it has its work cut out for it to compete with the likes of Square and Toast. It's going to take them a while. It's going to be a lot of work to sort of get themselves into the SMB industry. Now, this coincides with new CEO Chris's efforts to make PayPal more competitive in the SMB market. See, PayPal is extremely strong in the online space. They are lacking, however, in the physical realm. This will help get them there, according to plan. Whether in person or online, there are transaction fees that the user does not see. These are billed to the merchant and can typically range from below 2% to 4%. PayPal does not get this entire 2 to 4%. Now, these fees are split. So you got interchange fees, assessment fees, percentage, markup, and authorization. Now, I don't have time in this video to go through each of these fees. If you want more information on them, then head on over to my Patreon page. I have a 13-page summary on PayPal alone. On Thursday, I'll also have a PayPal evaluation model. It's only $1 for a limited time, and there's only a few seats left. The link is in the description. Now, let's talk about money. I love money. Don't you? Well, don't you? There we go. This is where I discuss PayPal's opportunities. Now, when the FTC becomes hawkish, I expect there to be some consolidation in this industry. The current competition is extremely fierce. This is mostly guesswork. I have not modeled for it. Now, the valuation metrics imply that investors expect PayPal to shrink rapidly. Oh, if you hear some sounds, that's my cat. I'll go over those valuation metrics in a bit. If PayPal stays the course or grows, its stock price should appreciate. Now, PayPal has very high cash flows relative to market cap, and this allows for share repurchases or acquisitions. Now, of course, there are some risks involved. The two biggest are, number one, competition. PayPal's single biggest risk is the extremely competitive global payments industry, which it faces both larger, more dominant companies and smaller, agile competitors. Some competitors include Visa, MasterCard, Google Pay, Apple Pay, Chase's WePay, Square, Stripe, and Zelle. The second big exclam is regulations. The industry is rapidly changing and faces increasing scrutiny and oversight from regulators. Now, before I get to the numbers and valuation, Shama says to like and subscribe. Help me grow from a small channel into a big one. In return, I'll keep giving you these awesome videos. Deal? Numbers time. Let me turn off the camera. So you can actually see the numbers. And now you can see why. While not recent any longer, the impact of COVID still affects PayPal to this day. Now, during the height of COVID, people switched from online payments instead of in-store. This greatly grew growth at PayPal, with revenues growing 20.7% in 2020 and 18.3% in 2021. This accelerated growth caused PayPal stock to skyrocket to over $300 per share in 2021. $300 per share! I'm not joking. Look at their stock chart. It's insane. And now it's 60. That wasn't the last, however, with the global pandemic reopening, with growth slumping to 8.5% in 2022. Now, PayPal shares have since slumped, currently trading at $60 per share, an 80% drop from the highs. You must go back to mid-2017 to see the stock at levels this low. You can clearly see the troubles the company went through in 2022 in operating income in this chart. The orange bar, 22 is crazy. The top line was also stagnating in 2022. Now, the numbers have improved in 2023 due mainly to cost reductions, including laying off 2,000 employees in early 2023, representing about 7% of the workforce. And with that, the CEO just had to go. In early 2023, Alex Chriss became the new CEO. A lot of the top-level executives also left during this period. Alex Chriss came from Intuit. He worked in the SMB business. He is the right fit, I believe, because that is where PayPal is lacking. Their SMB brick-and-mortar business sucks. Under new Chief Executive Alex Chriss, PayPal aims to expand what they call the PayPal Complete Payments services in the SMB market. Oh, and the SMB market stands for small and medium-sized businesses. Now, things are starting to pick up again in 2023. Share buybacks are here and they are big. PayPal repurchased $1.4 billion in shares in Q3, $5.4 billion trailing 12 months, reducing weighted average shares by 5%. How rare do you see that? 5%. That's huge. Just to give you an idea where the money is going, is this chart here. It's quite visible are the huge acquisitions just a few years back. Those yellow bars are the acquisitions. So they have some huge acquisitions, and they're going to use those to leverage growth in the future. But right now, it's all share buybacks, baby. Now let's go over the last quarter's numbers real quick. Revenue, $7.4 billion, up 8%. On transaction-related expenses, down 12%. Non-GAAP EPS, $1.30. That's up 20%. This beat the target by 7 cents. That's actually the real gainer here is earnings per share. Total payment volume, $388 billion. That's up 15%. That's huge for a company this big. They repurchased $1.4 billion in shares in Q3. Well, $5.4 billion around 12 months, which I already talked about. They divested Happy Returns for $465 million in cash. Now for the outlook. FY23 non-GAAP EPS, they expect to grow 21% to $4.98. Full year 2023 share repurchases are expected to reach $5 billion with $4.6 billion of free cash flow. Revenue is expected to grow about 7 to 8%. Non-GAAP EPS up about 10% to $1.36. Market cap currently sits at $66 billion. The thing that stands out here, other than Mount Everest, is the PE, which stands at about 17.5. Expectations have been extremely low for fintech stocks, not just PayPal. They all crashed. Even for valuation stocks, a PE of about 17.5 is low. McDonald's, for example, has a PE of 25.5. This is also fascinating when taking into consideration PayPal's massive share buyback program. It doesn't make sense. Coca-Cola's PE, 24. Forward PE is even crazier at 11. According to Yahoo Finance, PayPal has an extremely low forward PE. This is particularly low forward PE even for a value stock. It can either mean that something fundamental has changed in the company that analysts haven't yet accounted for, some significant contraction or trouble in the business, or a potential buying opportunity. Now, Wall Street gives PayPal a buy rating. Average price target, $76.21, a 23% upside, a Wall Street high of $145. Can you imagine if we get to that high again? Now, what am I doing? PayPal is a dominant player in a highly competitive industry. Revenues and cash flow steadily grow. PayPal also grows by acquisition, like acquiring Payd in 2021. Now, personally, I view PayPal as a value stock. Their growth isn't remarkable. The cash flows are great, however, given the market cap. PayPal can easily fund a stock buyback program, which purchased, as I mentioned, 5% just last year alone. The forward PE is extremely low. The negatives are the top-level changes in the company. PayPal has a new CEO and several executives have left the company in the last few years. This brings a level of uncertainty to the company as well as to the stock. Also note the fiercely competitive nature of the industry. Now, I expect some consolidation to occur, especially after regulators turn less hawkish. It will take some time for PayPal's transition to SMB customers to meaningfully affect numbers. What am I doing? I'm buying. Let me know what you're doing with PayPal stock in the comments below. Don't forget to like and subscribe. Oh, hit the notification bell so you don't miss my evaluation video due later this week. I will tell you exactly how much I think PayPal is worth. My cat says, thank you for watching, and we'll see you in the next one.